Welcome to Business Mastery with Don Kennedy, your quick under 45-minute dose of expert insights and strategies to make a positive impact on your business and life. Let's get started. Hello, and welcome to the Business Mastery Podcast. And today we're going to take away the mystery surrounding your financials in your business. So your bookkeeper, your accountant, and then when you need a CFO, what the differences are, why they're important. And as a business owner, when you realize or should realize that your skills in financial management may be capped, and it's a good idea to pull in a real professional. So Luke, thank you so much for joining me today.
Thank you, Don. I appreciate you having me on the show. Looking forward to it.
Yeah. Can you tell everyone who you are and who you serve?
Yeah, so my name is Luke Boyenger. I'm the CEO of Cruzumi CFO and Advisory. We are a fractional CFO firm based out of Phoenix, Arizona, and we work with businesses in the 5 to 50 million revenue range, helping them grow their business by managing cash flow and profitability proactively, either in improving profitability if it isn't where it should be, and same for cash flow, or just making sure that they maintain the healthy levels of profitability and cash flow that they've already achieved while they continue to scale.
Amazing. So let's just start from the very beginning. Lots of people within the first, I would say 6 months to a year, will hire a bookkeeper, and they probably have an accountant as well. Can we break down some of the mystery between all the different roles and then what the difference of a CFO is?
Absolutely. So let's take it in this order: bookkeeper, accountant, CFO.
Perfect.
So we'll start with bookkeeper. Bookkeeper is usually somebody who has some level of experience doing some level of accounting. A lot of the time, in fact, probably even most of the time, they probably don't have an accounting degree. They probably don't have a CPA license. The barrier to entry to become a bookkeeper is very low. You can be a high school English teacher today, go home that evening and pass the QuickBooks Certified Pro Advisor exam, which isn't that hard, especially if you're an unscrupulous person. You can just Google all the answers and pass in an evening, and all of a sudden the next day you're a bookkeeper. As far as the world knows, you're a bookkeeper. So there's not a lot of barrier to entry. It tends to be lower skilled, less experienced people. And bookkeepers are primarily focused on categorizing transactions. So you swipe your card in your business to pay all your expenses. Those transactions hit your accounting software, usually QuickBooks for most business owners. Somebody needs to tell QuickBooks what to do with that transaction. That is usually what a bookkeeper is doing. It's categorizing transactions, maybe doing some high-level reconciliations, potentially helping with some of the invoicing and maybe paying some of the bills even. Really, really transactional.
I was going to say, I think when we think about having a bookkeeper, especially one in-house, their job is financial organization more than anything else. And like you said, invoices, payments out and in, making sure they're being categorized correctly, and then making sure that everything is organized. So there's really very little, I would say, decision making beyond the categorization. They're not making a lot of decisions as to your financial positions.
100%, which gets us to accountants. And before I go there, I'll address this because when I give that definition of bookkeeper, there's always 100 bookkeepers out there who are up in arms. That's not me. I can do more than that. And that's true. There are some bookkeepers who are also accountants,
Right.
and they can do more than just a bookkeeper can do. But it doesn't mean that everything that they do is necessarily something that should be expected of somebody who is only a bookkeeper.
Right.
So going to accountant, first thing I'll clarify at that level is a lot of business owners, when they talk about their accountant, they're referring to their tax preparer, the CPA that they hire to file their tax return for them every year. And that is true. That person is an accountant. But there's this kind of misconception out there that accountants are people who file taxes. And while that is a true statement, it's kind of like saying professional athletes play basketball.
Right.
Well, that's true sometimes. There are some professional athletes who play basketball, but there are some professional athletes who play football or baseball or soccer. And it's the same for accountants. Some accountants file taxes for a living. Some accountants do audits for a living. Some accountants just work in businesses and do the accounting, financial statement preparation, and risk and compliance management for businesses. So, for today's purposes, I think we'll talk about accountant um, in terms of the accountant that works for you inside of your business, not the CPA who works for an accounting firm that prepares your taxes.
Right.
And that role is really somebody who, at minimum, has an accounting degree. They have studied textbook accounting. They have learned the requirements of the accounting standards required by US GAAP, which is the accounting standard that we use here in the United States.
Right.
They are able to produce financial statements that are compliant, that are accurate, that you can provide to a bank or to a potential investor in your company, and they will have an accurate picture of the financial performance of your company. But also, you as a business owner will have an accurate picture of the financial performance of your company at the end of every single month. It's not just categorized transactions, it's somebody who is structuring the financials in a way to deliver value by organizing a chart of counts in a way that, to your comment earlier, allows you to see things like profitability by revenue stream,
Right.
things of that nature. They are making sure that the data is there, it's accurate, it's on time, so that you are able to make decisions that are backed by data.
Right. And I think that's a huge difference is they also not only organize and can get a little bit deeper and provide those chart of accounts, they're also able to help with some of the decisions inside your company if you ask them to.
Yeah, mostly in terms of providing reports and data and analysis and things like that, right? Accountants are very history oriented. What has already happened in the business and what is the data related to what has already happened? How have we captured it? How have we accounted for it? How have we used it? How can we report on it?
Right.
It's all what has already happened. Whereas if we talk about CFO now, CFO is really okay. You've got your accountant. They're taking care of everything that's already happened in the business. They've taken care of the past. They're in charge of the history. What the CFO does is the exact opposite and says, I am primarily concerned with what has not happened yet. Where are we going as a company? What is coming our way in the next 6, 12, 18 months? And what do we need to be doing today to make sure that we're prepared for that when it does happen? The CFO is building budgets to maintain profitability. They're building projections to look out into the future. They're doing cash flow forecasting to make sure that we are in a healthy cash flow position, that we're not going to run out of cash at any time in the next 12 months. And if it looks like we're going to, they're being proactive about going out and solving that cash flow issue, whether it's going to a bank and opening a line of credit or doing some other short-term lending or making changes strategically in the business to how cash comes into our business and goes out of our business so that we get it sooner and keep it longer so that we don't have the cash flow crunch that we see coming 9 months from now.
Right.
They are 100% solving the problems of the future by using the data of the past to build predictive models about what is most likely to happen in the future. It's not a crystal ball. It's not an exact science. It is scenario planning. What is the range of possibilities that we see happening? And let's make sure we have a plan in place for all of them so that no matter what happens, be it a good economy or a bad economy, we're going to be okay.
I love that. So because it's all future based, if you will, um, let's talk a little bit about how the CFO role is different from, let's say, the other officers that maybe do a strategic plan, and so they do, the product launches and those kinds of things. Where does the CFO come in? Because again, you're building the budget, right? You got to be able to pay the project team. You got to be able to pay marketing. You got to be able to do those things. You have to be able to predict profitability on those lines. So let's talk about how it's built a little differently from the financial picture than, let's say, a project plan that would be built in a strategic plan.
Yeah. So if you step out into other departments like marketing, sales, marketing, good example. Those departments, people who work in those groups are really good at putting together a plan to grow revenue. But they're mostly thinking about growing revenue. Because if that is the role that you're in, you are usually compensated based on your ability to produce revenue. And so they're not always necessarily thinking about profitable revenue,
Right.
which is where the CFO needs to work hand in hand with other departments to make sure that the plans that we're putting together for the organization as a whole align with the required levels of profitability and cash flow that we need to grow a successful, profitable, cash flowing business. Because you may have a sales and marketing team that goes out there and puts together this a wonderful plan to go out and double your revenue. And you're going to go from being a $10 million company that earns $1 million net profit to a $20 million company that earns $1 million net profit.
Right.
And you didn't accomplish a dang thing. You just made it twice as hard to earn the exact same amount of profit, even though you doubled your revenue. The CFO exists to make sure that we come up with a plan that says we're going to double our revenue, but we're also going to double our net income as a result.
Right. And that takes into account all the things like you were saying, like sales and marketing. If they go out and they double sales based on the business that you're in, there could be hiring needs, there could be other things that have a little bit of a longer lead tail or time. And so you're actually out in front of everything that costs the business money as well, not just what they're doing.
Yeah. I mean,
Yeah, I think that's a huge thing is the capacity discussion isn't always made in sales and marketing, right? So
right.
it's not their lane, I would say. So that's important. All right. So now let's talk about skills gaps because I'm sure there are going to be some people listening in or watching the video and going, wow, okay, I'm getting close to that mark. I'm at 3.5. I'm at 4. When do I know that I have exceeded my own founder knowledge or my COO's knowledge
Yeah.
um, from running the operations and things to bringing in a professional who is solely looking at the finances? Because a lot of times, I think this role sits with the COO and the CEO maybe a little too long, and it can cost money in the business and hamper growth.
Yeah. The answer is, in my opinion, the second you feel like you're making business decisions based off of hopes and dreams and gut feelings,
Okay.
you are no longer making decisions based on the data coming out of your finance and accounting function of your business. You're ready for an upgrade.
Okay. Okay. So this really has to do with just kind of your individual, I would say somewhat comfort level, but also when you get to that place where there's no more, I guess, juice to get out of the lemon from what you know what to do with your decisions. Right. So you've been making your financial decisions pretty much the same way. You've been reading the P&Ls the same way, you've been looking at the things the same way. And when you run out of ideas to squeeze the lemon, you do need a CFO.
Yeah. Yeah. So either you're no longer able to make data backed decisions, or you're making data backed decisions the way that you always have, but they're not having the same result. There's something happening in the numbers that you're missing because you don't have the skill set to identify it. And you need to bring somebody in who does have that skill set. They can identify why what you're doing isn't working anymore and help you put a plan in place to fix it.
And let's also say that this is probably not something that's intuitive and obvious to most people. It's not that they're doing anything wrong. It's legitimately they've hit a skill cap that could be, preventing further business growth.
Yeah, usually it's as your business grows and the transaction volume increases and the things that you're doing increases, you just end up constantly adding more and more variables into the equation. And the model that you built when you were doing 500,000 a year in revenue just isn't going to work when you're doing 3 or 4 million a year in revenue. There are new variables. There are things that have changed that you need to take into consideration in your model and in your projections and how you're planning and running your business. And a lot of times when you start to get to that, I'd say probably $4 or $5 million mark,
Yeah.
depending on industry, you kind of start running into that wall a little bit. That that or maybe you even have the skill set. Like, I don't wanna discredit business owners and say, "Well, you aren't smart enough to figure this out, so you need to hire some."
Right. I don't think it's a smart thing. I think, like you said, that there are a ton of variables that maybe weren't there, 3 years ago.
Yeah.
Well, and
Well, and it's a capacity thing too.
right,
Like, take me for example. I I am a fractional CFO. I'm a CPA. I have the expertise to do this, which is why I'm in this business. But I am also a business owner. I run a fractional CFO firm.
right,
And right now, you know who's doing all of our finance work in my company? I am. But at some point, my firm's going to get big enough that I'm going to hire somebody else to do it because it's no longer going to be a good use of my time to do it. It's not that I'm not smart enough or capable of doing it anymore. It's that as an owner, the best use of my time is not doing financial analysis. It is leading the team, growing the business, doing business development, doing all the things that are going to make this business larger and more profitable. That is where my time as an owner needs to be spent. So when my firm gets big enough that we get to that point, I will 100% outsource that to somebody else because it doesn't make sense for me to do it anymore, not because I'm not smart enough.
right, right. Yeah. I mean, the CFO role, I think, is one that people are I'm gonna say slower to hire than, let's say, the COO, right? Or they'll hire a marketing person, the CMO will come in, brand management and those kinds of things. Because I think sometimes, again, there's this sort of assumption that, the top line is what needs most of the focus, especially early on. I think we look at those top line numbers. There's a lot of social media around grow your business to, 6 figures a year or whatever. And then you get down to it and they've made $2.99 by the time they've paid out all the things. So, uh, yeah, I mean, the one thing I would definitely wanna make sure we kinda hit home is the CFO position itself is going to identify that split between your top line and your bottom line, right? That profit that you come in. And even though a lot of times we might hire on that CMO first, or we'll hire on those top line people first, I don't think it's for any other reason than maybe, the awareness that, having the variables that came in that affect that bottom line in such a sometimes very nuanced way, I would say, right? That we don't necessarily see that as important. And, we like to refer to those, I guess, as profit leaks, right? I mean, your job is plugging up the all the profit leaks first and foremost, right?
Yeah, and I think that's because the accounting and finance industries as a whole have done a terrible job of educating the marketplace on the value that they deliver. And so if you go out and ask every business owner in the United States, why do you need accounting in your business? It will be a very high percentage of business owners who say, well, I have to have it to file my taxes.
Right.
That's the answer. That is really the only reason that a high percentage of business owners bother with accounting in the first place. Because there's not this fundamental understanding that accounting is not so that you can file your taxes. Accounting is a value function in your business. In fact, it's one of the highest value functions in your business because accounting is what is going to tell you how your business is performing so that you have the information you need to adjust accordingly and make sure that you continue to grow and build a thriving, profitable business. It is not about being able to file a tax return. Sure, that's something you have to do, like, we gotta cross that bridge, but that is not the reason that you have an accounting function in your business.
Right. Right. Absolutely. And you're right. I think a lot of people treat the financial stuff as sort of an afterthought. Even from the very early startups of figuring out how to price something. There's a lot of interesting things out there that just say, well, just 3x your wholesale. I've heard that a few times. And then, where's the overhead? Where's the labor? Where's the things? Right. So, I think from the very earliest on time, you're right. The accounting and finance arm of business or the part of the wheel, um, they don't necessarily market, the huge cost savings or the huge value that can be found when you plug all the profit leaks and you could take home more money, those kinds of things.
Yeah.
Um, and you're gonna change that though, right? With your firm. I mean, you're out there talking more about that's how we found each other is the value of the CSO, so or CFO. So let's
CFO role is really the key to unlocking the value in the accounting function because most business owners aren't accounting and finance people.
right,
They're skill people, right? They were really good at framing houses, for example. So they started a house framing business, right? They don't know anything about accounting and finance. So even if you have a world-class accounting team putting world-class accounting data in front of the business owner every month, like it's gibberish, right? If you don't know how to read it and interpret it and understand what it's telling you that you need to do as a business owner, it's useless. So the CFO bridges the gap. They become the financial data translator, if you will, for the business owner, telling them all this high quality accounting data that you've invested in, here's what it means. Here's what it's telling you. Here's what we need to do differently that the data is telling us.
right, yeah. So let's talk about I guess the way to find the right CFO, to hire a CFO. Now you're a fractional. So let's talk about the difference between having a fractional CFO and then going all in and hiring a full-time C-suite guy, because this is an available role that businesses can consider if they're a little nervous about bringing in another full-time, C-suite employee.
Yeah, great question. And we're about to see a seismic shift in the way that this gets approached in most businesses. Because if you think about the way this has worked historically, if you own a business and you needed a CFO skill set in that business, you had one option and one option only: go hire a full time CFO. Meaning, you don't get a CFO skill set in your business until you're big enough to justify the salary of a $250,000 a year employee. So if you're under 10 or 20 million in revenue, good luck. You're figured out on your own. No one's coming to help you. You can't afford it. Whereas now that fractional CFO exists, those same companies can go and get access to a CFO skill set for a fraction of the cost of a full time CFO. So that CFO skill set is now available to much smaller companies than it's ever been available to in the past. And the real beauty of that isn't just that smaller companies can now get a CFO skill set, it's that bigger companies can get the amount of CFO that they actually need instead of having to buy the whole thing. Because you might be a $50 million a year in revenue company. That doesn't mean that you have 40 hours a week of actual true CFO work that needs to be done. In fact, it's highly unlikely that you do, even at 50 million. Unless you've got some complex growth strategy where you're going out and acquiring 5 or 6 businesses a year to try to scale very quickly, you probably still don't need a full-time CFO at 50 million a year in revenue. If you're just doing 10% year over year organic growth, that's probably still only like 5 hours a week of actual CFO work that needs to be done. So
So
you don't want.
hang on a second. Hang on. Say that again louder for people in the back. The CFO role can come in earlier on in your business because you probably don't need 140 hours a week.
It's, I think fractional CFO, when it first came out, was all about affordability. Fractional CFOs for companies who can't afford the real thing.
What a tagline. What a great marketing strategy. He ain't one you can't afford it. Here, get this guy, right? Yeah.
Yeah, exactly. But
Hilarious.
so many just high caliber, really experienced CFOs have left companies and gone fractional. That when you bring in a fractional CFO today, you're bringing in a world class, high quality CFO. And it's not about, oh, this is just the crappy version of CFO for the little guys who can't afford the real thing.
Right.
This is an efficiency play for businesses who are smart about how they structure their team and not having a full-time CFO sitting there categorizing transactions and paying bills because you don't have enough work to keep them busy.
Right. Right. So you're seeing the fractional trend. It's probably going to continue. And I'm really hoping that people who are listening or watching are realizing the huge impact that the forward thinking financial professional and the future and building the models, looking at the new variables. I do have a question that I know some people are going to ask. If I hire a fractional CFO, am I going to get a new different guy every month? Or is there someone who stays with my business, knows me, my personality, it's a good fit, as if they were going to be, my CFO?
Yeah, great question. And my answer is it depends on which fractional CFO firm you hire. there's there's some bigger names out there in the fractional CFO space that operate in a model where they bring on fractional CFOs as contractors. And the fractional CFO firm is really just a marketing agency that they go out and they bring in work that they give the 1099 contract CFOs who work for them and fill up their book of business. Well, what happens is those 1099 contract CFOs get a full book of business and they say, "Cool, I'm good. I don't need you guys anymore." And they take their book of business and they leak. And so those firms kind of have a revolving door of fractional CFOs coming in and out of them all the time. Whereas the way that I have built my firm is that all of my CFOs are W-2 employees of my firm. They work for me. They're not out doing sales and marketing and building a book of business. I do all of that. All they have to do is serve my clients really, really well as CFOs. They just get to be CFOs and do a really good job. So, and the way that my business is structured, they're able to make a lot more money working for me as a fractional CFO than they can make working at a company as a full-time CFO. So we don't have a revolving door of CFOs. They come, they're getting to work with really cool companies that are awesome to work with and really appreciate what they do. They're able to make more money. I'm not working them 60, 80, 100 hours a week, grinding them to death like finance and accounting tends to do. They get to work a normal work schedule and have plenty of time with their family and time to enjoy life. So we've created a role for CFOs that's highly desirable and attracts really high quality people that stay long term.
I love that. So can you tell everyone where you are, how they can find you, how can they hook up with you? And the last thing I really want to talk about is what is the preparation you should have before talking to a CFO to make it less intimidating? As far as, you've got your accountant and you've got your books and you've got your taxes and all those things. But is there anything else that you need to bring to have the conversation and then where can they have it?
Yeah, not really. Honestly, we meet you where you are is our approach. Wherever that is, whatever that looks like, we will show up and serve you where you are today in business. So if you have a world-class accounting department, great. We'll come in and pick it up from there and get you to that next level. If you're like, my entire accounting department just quit and I don't know what to do, I probably need to solve that problem so that I don't look dumb when I come talk to you. No, not at all. Come to us as you are. Let us help you fix the accounting department so that we can help you make sure you get the right people in the right seats with the right skill sets so that we don't have problems coming out of the accounting function going forward. Like, we're able to step into the mess with you and help you figure it out. That's what we do. To answer your other question, we're located in Phoenix, Arizona, but we deliver all of our CFO services virtually. We do Zoom calls with our clients. It's very effective. It works very, very well. And it allows us to be able to serve anyone really in the United States is kind of our focus area. We have a website, cruzumi.com, Cruzumi. I'm on LinkedIn, Luke Boyenger. Fun fact, I'm the only Luke Boyenger in the United States, so I'm pretty easy to find. You plug in my name, I'm the only thing that's going to come up. So reach out to me on LinkedIn or contact us through our website, and we're happy to chat.
Amazing. So we're going to put all that down in the description and the show notes and we'll link everything. So if you are a business owner and you are anywhere where you need to get some future looking financials and models and things, then yeah, we need to consider that fractional CFO much sooner rather than later because that top line revenue, that's not the only thing that needs to grow.
Yep.
Amazing. Well, thank you so much for joining me today.
Thank you, Don. I enjoyed it.
All right. We'll talk to y'all next time on the next episode of the Business Mastery Podcast. Take care. Thank you so much for listening to this episode of the Business Mastery Podcast. If you want to learn more about me, you can go to DawnKKennedy.com, and you can now check us out on YouTube as well as, of course, any of your favorite platforms that host podcasts. Take care.